Hey guys, how's it going? Thought I'd do a quick vid on monetary systems, just a bit of an update on 2019, and I'll make it just very quick and breezy. I've uploaded other videos on it before, and this relates to civil media because it's the kind of thing that's a common goal. We probably need something, a tool like civil media to help us bring actions, cooperative actions together. Because essentially sovereign money needs to replace the current system, and it probably needs to do it at a time after a crisis, but you need to be ready for that and so on. So it's just something that I'm interested in, because I think it will affect society in a big way. So yeah, I'll just give a quick update. I'll just breeze through it. Go over to the slides would help, eh? Right, so the current fiat monetary system is pro-cyclical. So when you need more money in the system to sort of boost the cycle of consumption and production, you create money, but that creates more debt, and that's always seems to be done. There's the production consumption cycle, and you want to support that. You don't want inflation to hinder that or bank runs and things. All the sorts of crises that have happened in the past in the history of the Federal Reserve. So money is sort of a means of exchange when you look at that cycle. And then there's created money is introduced to try and get the wheel spinning faster. And that's historically been done through the housing market. So what happens is the central bank will drop interest rates for lending. The banks pass that on, people lend more money, and of course you can't just lend money to go buy beer. It's got to be for certain things, and the housing market's one of them. So a lot of people do that, and the average cost of a house goes up from 3 average annual salaries to 12 average annual salaries, and that's pretty much when the GFC happened and the market crashed. So now you end up with no more money creation, no more money creation driving that wheel, spinning the production consumption cycle. And it gets worse, right? Because money creation is more money, is more debt, and now more money destruction is required. So now you've got nothing spinning it, but you've got the brakes have come on now. So now the brakes are on the economy, the real economy of production and consumption. And the brakes hit hard. And of course, what happens is especially in the US and the UK, they bailed out the banks, moved the debt into the government sector, out of the private sector, and the government started printing money, which they call, here we go, that's it slowing down, which they call QE. And they lowered interest rates to almost zero after the GFC, so they kind of got the housing market going again. People started borrowing again. So you got money creation from the housing market, printed money going into stocks and bonds printed by the government. And that, it's thought that it'll drive consumption because people will buy stocks will go up. They feel more wealthy, and so they're more willing to spend. Consumption fuels production, it boosts the real economy. So on the left is the real economy, and on the right is all the stuff that we're meant to do to that's not on completely, but anyway, you get the point. So this stuff on the right is meant to regulate the real economy, but it seems to be boosting it, spinning the shit out of the wheels and then hitting the brakes hard, and that's because it's pro-cyclical. So it just crashes. Where do we go? Right, so that's where we are with the recovery at the moment. And of course, individuals who have got to pay off mortgages and businesses with debts have got to destroy money. I'll put all these videos on sovereign money into a playlist where I go into more depth about what that all means. What is sovereign money going to do to replace that? I got this idea from Positive Money, a group in the UK. So if you go to positivemoney.org or something, Google it, you'll find their group. They've got a lot of documentation and resources and some good videos on on YouTube. But I got the idea from them, and then I saw Switzerland recently had a referendum, or Iceland, sorry, but it lost. But basically, the big difference is, and it's, to be honest, it's a solution to the system as it is now. It's not an ideal system. It's we're in this mess. We've got to sort it out somehow, but without just kicking the can down the road. So how do we actually get back towards a more ideal situation while dealing with the system as it is now? Right. So it's counter-cyclical, which means more money, as money is introduced, created, it reduces debt and destroys money more directly, rather than, this bloody mess over here, rather than via a market crash. So what would happen is, instead of the private banks being able to create, the pragmatic ways of getting it going, there's the option to allow private banks to carry on creating money. But basically, the point is to get to a point where private banks can't create money. It's the central bank that creates money. Whereas now the central bank sets the interest rates that influences how much the private banks can create. So, when the central bank creates money, it's going to give it to the government. The government decides how to spend it. So the options for that: you increase government spending. Labour government will love that. Or you have tax cuts and rebates for homeowners. Conservatives will love that. Citizens' dividend, which is also known as helicopter money. Give everyone $1,000 or whatever. They did that in Australia, but they did it in this monetary system where the private banks can still create money, and just more not so directly involved in money destruction. Or business lending to the real economy, right? People who are actually producing goods by consuming other goods, inputs and outputs, right? So there's the real economy, means of exchange, and we want to avoid things like inflation and stagnation and bank runs and all those things, and also deal with the situation we're in at the moment. So we're at a situation where the housing market crashes again, say second GFC, or it crashes for the first time in Australia. So there's no money creation from the housing market. So now, instead of doing QE, maybe you do a tax cut as an example, or increase government spending, or citizens' dividend, those 4 options I talked about. Now that money creation goes more directly to money destruction. It doesn't go around through the real economy then come out. It goes more directly. So if you've got a home loan, a mortgage, and you get a tax cut, you might put 90% of that towards paying down your debt, which destroys money. Of course, not everyone will destroy money. If you don't have a home loan, you might just spend. So some of it goes and drives consumption, and that keeps that wheel spinning nicely. It doesn't go too fast, and hopefully doesn't slow down too much. And of course, producers of goods and services might pay off their corporate tax loans. Why is that back there? What's going on here? Oh, no, there we go. Let me just put that back, right? So maybe when you initially start putting this system in place, you would allow private banks to still create money, and so you might find that with interest rates, there is money creation from private banks, but you'd try and reduce that and slowly turn it off, so that basically, eventually, the housing market is part of the real economy. It's not part of money creation, so that you're not in a situation where the average house costs 12 average annual salaries. And then of course people will say, but what about us? We bought our house at 11 average annual salaries, and it went to 12, and now it's dropped all the way. Well, that's where this money creation from the new system would go. You would get the benefits of tax deductions and things to pay down your debt. Maybe rebates, maybe there would be a plan between the central bank and private banks to reduce debt amounts, so that it's fair and everyone can get back to where a housing market exists in the real economy. And because of the past, you might expect that to be 3 times the average annual salary. Everyone's a lot better off then. Like, do you know what I mean? If the same amount of money can buy you 4 times the goods and services, you are a lot better off. You're automatically more prosperous. And so this is what the sovereign money system would look like. It would slowly destroy money that was created. And then the only money creation would come from the central bank through the government, and it would just regulate the real economy here, rather than putting it on a cycle where it just speeds up, and then suddenly the brakes are put on. There's a slam on the brakes as people try and destroy money. Right, hopefully that wasn't too long. Just a quick chat about sovereign money. I'm interested in it. I'd like to see it, if there's another crisis, I'd like to see this put in place, rather than, especially in Australia, because we're in Australia where we didn't have a GFC, and there's threats of the housing market seems to be teetering on the edge. Whether it is or not, we'll find out in the future. But Sydney has lost 10% of house prices have dropped by 10% in like a year. So there are worrying signs that we might finally get our GFC, and I just don't want the Australian government to make the same mistakes that the British and the US government have made, where they start printing money with QE, trying to get the economy going again, and then you wind up in a situation where you just got massive government debts. And I think this is a good solution in terms of getting us back to a more ideal system, and in terms of solving the issues that has been created by the fiat monetary systems that we've got. Thanks for watching, guys. Have a good one. Cheers.